Welcome back every day at noon on the TD Webroker platform at TD Direct Investing. You can catch more Money Talk Live, hosted by none other than Greg Bonnell. Every show, viewers not only get a chance to listen to interesting guests, often only found on the platform, they can also ask their questions. Greg joins me now and has some highlights from some of the interesting guests he has spoken to recently. Hello.
Hello, Kim. Also interesting times, right? When you consider the Bank of Canada delivering another rate hike, they're concerned that they're not going to be able to get inflation where they were before. Back down to their target. And I know you had a big discussion with James Orlando off the top of the show. And one of the things the Bank of Canada talked about was the strength in the labor market, the strength in the economy, and the feeling the need to do more. That sets us up nicely a week from now for the U.S. Federal Reserve. What are they going to do next? So not surprisingly on the show, and not only today on the back of the Bank of Canada, but throughout the shows, you get a lot of questions about the future direction of interest rates, what central banks are going to get up to. So we had Justin Flowerday on the program a couple days ago, head of public equities at TD Asset Management. He was asked about last week's blowout U.S. jobs report, what it could mean for the Fed. And here's what he had to say.
We got some interesting data out from the U.S. on Friday with the jobs report, and it was probably stronger than people anticipated, but there are a couple caveats. The headline number, they created 340,000 new jobs in the U.S., and so that was higher than anybody had estimated. So another really nice, strong jobs number. On the other hand, they had unemployment rate, which actually went up to 3.7%. It's the result of a different survey that the Fed runs. The one that folks were really looking at, though, was average hourly earnings. And so that's an indication of wage inflation. And that came in up about 4.3%, which is a bit of a slowdown in the rate of wage gains there. But for all intents and purposes, the U.S. labor market remains very, very strong. We received the JOLTS report, which was out earlier in the week, last week. A number of job openings per employed, per individuals looking to get hired is 1.8. That was up from the last month. So overall, very strong job environment in the U.S. And it begs the question: what does the Fed do in June when they meet? And do they raise? Do they hold pat? And I think the way I'm approaching it right now is we're likely to see a skip to the July meeting, and I would expect that in July they would raise rates once again.
I like that verbiage. Not a pause, a skip. They're going to skip over to July. So that's Justin's call. Given what happened with the Bank of Canada today, I actually got in touch with Justin. Says he's still with the skip on the Fed. As a lead up, from the BOC. He said, no, I still think it's a skip and then a hike in July. But of course, if people aren't talking about interest rates, they're probably talking about artificial intelligence, because that's been a buzz for quite some time now, propelling a lot of stocks. So I had a chance for Justin to answer a question about the potential disruptions we're going to see from AI, and really, if it's the real deal. Here's what he had to say. We're taking your questions about the markets, plenty already coming in. So let's get the first one here. Can we get your guest's view on all this AI hype, which is pushing tech stocks higher? Is it overblown?
I certainly don't believe AI is overblown. We actually just did a deep dive within the investment group into AI, and looking at the evolution of the technology and looking at the impact on company kind of margin profiles and profitability. And the conclusion that we've come to is it's not overhyped, it's not overblown. This is the real deal. I don't think that's probably any surprise to you. But when it comes to the near-term impact on the market and what you've seen from it's called the big 6 or 7 technology companies, we've had some pricing in of future revenue growth that goes well beyond the next couple of quarters. We're now thinking that the market is now pricing in some very, very significant revenue growth from AI in order to get to the valuations they are. And it's resulted in a narrowness of breadth in the market, which we haven't seen too many times before. And when you think about the top 7 technology stocks that have driven this rally, they're up on average 50% year to date. The outside of that, the S&P 500 is flat. So again, just a massive, massive disparity. And the last time that we would have seen this type of narrowness of breadth would have been back in the kind of tech bubble. So I think, look, this is real. It's going to benefit companies like NVIDIA, companies like Microsoft, and companies like Alphabet in terms of data center growth.
Of course, Justin hasn't been our only guest this week. It was really nice to have a follow-on the next day with Julian Nonowanden. He's a semiconductor analyst with TD Asset Management. So if you're talking about AI and all the buzz around it, of course, you have a lot of people sending in their questions about investing in the chip sector. Is it possible to play companies that are suppliers to the semiconductor industry?
It certainly is. As we talked about, there are a group of companies known as semi-cap companies, semiconductor capital equipment companies. And so these are the companies that provide the equipment used to make semiconductors, ASML being one of the most well-known ones because they have a monopoly in one of the key steps in making semiconductors, lithography. But you have a number of other companies. You also have a number of software design companies, Synopsys and Cadence. The ecosystem is quite large, and I'd sort of encourage sort of people, investors, to look beyond the obvious names. There's certainly interesting pockets there.
Those are some great guests. Good stuff on there. Have you used ChatGPT?
I have used ChatGPT after it all sort of got the rage, because that was the thing about, we had a conversation with both Justin and Julian about the fact that AI has been around for a while, right? Yep. But once ChatGPT sort of landed earlier this year, the general public had a sense to get a taste of it and what its possibilities could be.
And anybody with a phone, right? That's the thing, it's amazing. And like, there's a lot of people in the world with a phone. So everybody gets a taste and can really put it to use. Here's my question for you. What do you got coming up?
What do we have coming up next week? We'll get you ready for the shows. On Monday, we're going to have another conversation about central banks and what could be happening there. We're going to get a TD economist on. Maria Solovieva is going to talk about that, and we'll just be a couple days outside of that. Big rate decision, be definitely a market mover. James Dixon's been on the show several times from TD Securities, a big thinker. And Alexandra Gorwitz. I know she's a star of this show. She's a star of our shows, too. Love talking fixed income with her.
Yeah, they're all fantastic. I'm a big fan of Alex as well. All right, Greg, thanks so much. Greg Bonnell, Money Talk Live. Catch it every day at noon on Webbroker. And if you want to get in touch with us, this is how you do it. moneytalk@td.com. Thanks so much for watching. Hope to see you again next week.
The preceding paid commercial program was brought to you by TD Wealth.